Hey everybody, ladies and gentlemen, hello, my name is Darius Anucauskas and I'm Chief Market Analyst here at Markets.com, and today is Wednesday, ladies and gentlemen. We have a busy day, a busy economic calendar. Look, about all this and a little bit more in my webinar right now, so stay tuned. Don't forget to like and follow and the usual stuff, but hey, I'll see you in a bit, okay? All right, ladies and gentlemen, hello. Sorry about the little pause right there, but hey, I was kind of running late a little bit because I had some other things to finish off, but hey, managed to get here finally. Right, ladies and gentlemen, welcome everybody. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Wednesday, ladies and gentlemen. Today is the 4th, yes, the 4th of June, 2025 still, yes. So ladies and gentlemen, welcome. We have a busy day. We have quite a busy day on the economic calendar, so about all that in a moment. Before we go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yeah, like I said, the economic calendar is full of action today. We'll look into all that, what we're getting there, and we'll try to see the market reaction. Also, before we jump into the charts, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's have a look at Nikkei, the first one here, the first index on my list, and what can I say? So far, so good. We're holding nicely. We're holding nicely above all the EMAs on my daily chart here. If you remember, a while ago, I have been talking about this, and I said that, look, from the technical perspective, it seems like we could be forming something of a inverted head and shoulders pattern, with the neckline being somewhere around this this upside line right here, which is drawn from the low of the 2nd of October. So we had a nice test of it here back at the end of May. We drifted back down on some tariff talks again, but apparently the market is now seeing some positivity, because again the two leaders of the two conflicting kind of tariff countries, the main two leaders, if we can say it, call them that way, are planning to have a call. Let's see if they can reach some sort of a deal or anything, because today is the 4th and the tariffs are taking into effect, going into steel and aluminum tariffs. Aluminum tariffs are taken into effect, but again, there is a planned call, so the market is really carefully monitoring the situation, what's going to happen there, what kind of outcome we'll get, what kind of headlines we'll start getting. So be careful. At the moment, like I said, the indices are kind of in limbo, I would say. They do want to go higher, but it seems like they're just missing that little element, which could help them go to the upside. Now, look, in terms of economic calendar, this morning we started off with Jibun Bank. Jibun Bank Services and Composite PMIs, the final ones, the Japanese ones, and those came out, well, the services came out higher than the forecast. That's great, however, still below the previous. Same story, well, not the same story, but with the composite, there was no forecast available, but it came out on the lower side. So in general, not the best numbers in a way. However, maybe just the fact that the number still remained in expansion territory above 50. That's kind of helping the positivity here, because again, probably the market understands that at the moment we're going through these slightly difficult times, and that's why it could become a little bit of a tricky moment. Now, long story short, do I do anything with this Nikkei right now? No, I don't, because I do continue observing it, because honestly at this point I would prefer actually to wait for a push somewhere above this 38,500 zone in order to kind of consider a move higher, because then I will get a forthcoming higher high. We would break the so-called neckline as well, and this could open the door to some higher levels like the 39,500 zone, or maybe a little bit above that. In terms of the downside, short-term downside, I would say a drop below all my EMAs and the drop below the 36,855 here could be attractive a little bit here for the bears, and we could maybe consider a move lower. But you know, if we do, let's say, fail to go higher here and straight away start falling below my EMAs, then and we start then breaking the 36,855 zone, then yes, this kind of could confirm a possible double top pattern, which could drag a little bit lower, but I think that this is quite reasonable, the area around the psychological 36,000 zone, or maybe a little bit below that. China 50, let's have a look at that one. Still remains above all the EMAs, so in a way there's still hope for some positivity, so let's not rush into things here. I would say keep your eyes on some of these areas, the areas that I'm watching. So on the upside, the 13,555 zone. For the downside, drop below the 13,288 zone here could be an interesting moment here to move and to aim for the 200-day EMA. Let's see how that's going to play out. In terms of other economic data, Australia came out with the GDP growth rate, and let's have a look. So GDP growth rate Q on Q came out in plus 0.2, not very good, I would say. The year-on-year number came out the same as previous. Okay, that's still fine, you know, somewhat, that's holding on somewhat. The Q on Q did drop, so that's not very good. Okay, let's see how the ASX200 reacted to that. Positively in a way, because again, it's like no bad news, it is good news, you know. So no good news, but no bad news, still overall good news. So that's what I'm saying. So, you know, at the moment, I think, like I said, the market is enjoying the rally here. Look, we're getting closer to the all-time high, and unlike other indices and the U.S. ones, which I'm also kind of saying that, you know, they could be going and hitting the all-time highs. ASX200 is actually now almost doing that, and almost hitting the all-time high. Well, we just have, like I said, around like 50, 60 points left to, you know, to go here, which to be honest are quite doable. Let's see if we can do that this week, and then we'll have ourselves a beautiful V-shaped recovery here, especially clearly visible on the weekly chart. Let's jump into Dow Jones Industrial Average daily chart. So yesterday some positivity kicked in, great, wonderful. What can I say? Dow was not the top performer. NASDAQ was. However, still Dow went nicely to the upside. And in a way, look, I talked about this again, also about this inverted head and shoulders pattern with double head here. And so far, so good. And so far, so good. And yes, we are moving in the right direction, I would say. We remain above all the EMAs. However, as I said before, I would prefer to wait for a break of the neckline, which, let's keep an eye on the 42,800, 900, this zone right here. If we clear it, wonderful, I'll go to the upside. In order for me to consider slightly lower levels, I'm not going to drag this one way too much to the downside, but if we fall below all my EMAs, the 100, the 200, the 50-day EMA here shown as the green line, so then yes, I will consider a bit of a move towards the 40,000 kind of 700 territory, somewhere around there, and then we'll go from there. For now, like I said, that's my game plan. I don't want to do anything else here, but yeah, I will, like I said, I will stick to this idea for now. But again, am I getting very bullish at this point? No, not really, because again, I need the confirmation, and I keep on saying, although it looks very, you know, interesting, very attractive, and could support one of the sides, still you need to wait for those confirmation breaks. And okay, I'll jump into the data after the look at all the indices. So the S&P 500 had a great move yesterday, tested the 5,900 and kind of 70 territory, and we stalled here a little bit. Look, still, like I said, I still need that push here through this territory, and if I can get that, great, I'll go further north. For the downside, I would like to see actually a drop below the lower side of this little range here, a drop below the 5,787 zone right there, and then we'll, like I said, consider a move lower. However, the problem is that it depends on where these EMAs will be. If they're going to remain somewhere here, then okay, that's fine. Then we will, like I said, then we will kind of see if those can provide some support or not. But look, ideally, if we would consider a move lower here, I would prefer all these EMAs kind of to approach this area, and we can just, like, you know, if we're ready to move lower, we break them all at one go, the lower side of the range, the EMAs, and then we move lower. And that's like, that for me would be the best confirmation. NASDAQ 100. So yesterday had a great move, tested the upper side of this rising channel. I talked about it on Monday, and we stalled here. We stalled, but the great point here for the bulls, I would say, is the fact that we remained above the highest point of May. So we cleared the highest point of May yesterday, but we stalled, you know, near this upper side of the rising channel. Now, if we do clear the upper side of the rising channel, I will go further north. I'll aim for that all-time high, and I said before, and I'll say it again, I said it at the end of May, and that maybe it's June that's going to be, you know, very positive here. We could see a test of this area, maybe, just maybe, but let's not rush into things. Let's not rush into conclusions, and hey, let's, for now, just go slowly. Stick to the upside, however, wait for the confirmation break. If we start falling back and stay below the highest point of May, which on my chart here right now is at around 21,611 zone, then yes, then I will get a little bit more excited with the downside maybe, but of course ideally a drop below the lower side of the rising channel could do the trick here for a few more sellers. DXY. Now, DXY rebounded yesterday, remained above this 98.70 territory. Okay, good for the bulls. However, still not good enough. Looking at the economic data today. Let me just jump into. The economic data today. We have the ADPs, by the way. We have the ADP employment change, because we are in this week of full of job numbers, full of US job numbers, because yesterday we had the JOLTS, and JOLTS came out as a surprise move to the upside. There we go. So good result here, supported the economy a little bit, and yeah, wonderful. Now let's see if we get some sort of a surprise on the ADP today, which at the moment is expected to come out, well, okay, there are different sources, and this one is referring to 115, but there is another source referring to 70,000K. So again, it's really, at the moment, I would say just, you know, don't focus on the forecast too much, focus on what's going to actually come out. And if we do see another, you know, push like above the previous number, that's great. That would be 2 out of 3. And then we would wait for the Friday's NFP. If Friday's NFP is going to come out higher, then we'll have like a 3-home run here. And we could see the stock market actually going maybe for that all-time high. Hey, let's see. Let's check out this. This is just an idea. You know, you be the judge. My only problem is with this right here, right there. The MBA 30-year mortgage rate, because it has been increasing lately, and last time it was 6.92. It keeps on rising, so I'm really curious if we're gonna hit 7%. So that's the mortgage, the fixed mortgage rate, the 30-year fixed mortgage rate at 7%. What can I say? Can we see? Ooh, is there a launch chart? There we go. Let's see if this. Right. Okay. Yeah. There we go. This is what I was looking at. So basically, the lowest point that we were, it was back here, back in 2020. This is when after COVID, when the stock market dropped, and then we kind of started recovering slowly. They were trying to support the economy, and then the rates started pushing to the upside here. And look at this. At one point, we were in October, we were at almost 8%. So we declined a little bit. So now the question is, can we see a little bit of a correction back down on this one? Look, I'm not going to say anything else, but it's an interesting chart here. Let's have a look at during the crisis, during the 2007, 2008, those numbers were still somewhere around, just below 7, actually below 6.5, half. Now we're closer to 7. So, interesting. I mean, okay, this is understandable because again, probably after the crisis, just after the crisis, I mean, the numbers should have been lower even then. But now they're like higher, and okay, that means maybe the market is doing well. However, if we start seeing a drop here, I think that this is somehow, we could interpret that maybe they're trying to stimulate, the market, the housing market. Maybe they're trying to increase more new buyers. Let's see if that's going to be true. I mean, if this logic kind of has a place to be. But it's quite important to see what's going to happen next. If we're going to cross that 7% mark. Another piece of data to keep an eye on is the S&P Global Composite PMI figure from the US. That's expected to come out on the higher side, and of course the ISM Services PMI, which is also expected to come out on the higher side. So, long story short, if everything comes out on the higher side, then I would say, look, this, like I said, everything could support the potential move to the upside on indices, and I think this is what the market is looking for. And at the moment, while we're dancing with the tariff wars, I think that the market is trying to squeeze everything what they can, from this end, kind of until, let's say, because the market, I think, maybe believes that there could be something bad brewing. Let's see. Now then, like I said, coming back to the DXY, I am not really a strong believer in the dollar yet. Unless I start seeing a push back up of the 100 and 100.5, something like that, right, this area, because at the same time we could break the 50-day EMA here, shown as the green line, and potentially could attract a few more buyers into the game here. So then of course I'll aim for my EMAs. To be honest, I'm instead of going maybe for some levels at this point, I'll aim for the EMAs, the 100 and the 200. But at the moment there is a chance still for a drop lower. We need to make those US exports a little bit more attractive, so we don't need a stronger dollar. Let's see if that's gonna follow through, if this idea will follow through. The German index DAX, and I mean, look at this. I mean, this is just, oh, by the way, just a circle here, something that I was analyzing recently. But look at this. I mean, we opened up with a gap to the upside. It was another gap here. Are we gonna have something like runaway gaps? Hey, let's see. But again, we are near the all-time high, 24,326 zone-ish. We need a clearance of that one in order to go further north. And by further north, of course, I will be aiming for territories like 24,500, 25,000. Those are going to be my targets, and then we'll go from there. But at this point, look, I think the market is crying for a correction lower, but at the moment we're not getting that. So you can jump into shorter time frames here, the 4-hour, maybe the 1-hour chart. Look, at the moment, the 1 hour is kind of, still pointing more towards the upside. So, in a way, I think that we're not really done with the upside scenario yet. Let's see if what's going to happen with this 24,326 territory, the current all-time high. The FTSE 100, beautiful range trading here. For those who love trading ranges, congratulations, this is for you. The FTSE 100 still is kind of moving sideways. Look, I think that for Europe in general, we don't really have much stuff happening today, but tomorrow we'll get the ECB interest rate decision. So just kind of keep that in mind, ladies and gentlemen. And that's where we could see more movement in the DAX. Maybe this is where the DAX could kind of carry, or carry with it, let's say, the FTSE 100 again, just, a reaction move. But mainly it's the DAX that we're going to be looking at. But the FTSE, yes, I mean, it's pushing higher. It's trying to make its way higher, but it's struggling with this little range where it's currently stuck in. Gold, look, gold in general, I talked about this, and we broke the upper side of the falling channel. That's great. That's what I talked about. I already talked about this a lot, because again, the prevailing trend was to the upside. Then we entered this formation, so the greater chance for this one was to break out higher. There we go. We got the breakout. Question here is, what's next? I mean, are we going to go just higher just because the market right now is unstable and everybody's like thinking, oh, we need to buy gold? Well, how to say it? In a way, yes. In a way, because you can say that yes, gold is seen as a safe haven when the markets turn bad. But I think that I'm a strong believer that the gold rallies before the markets actually go really bad. When you start seeing first kind of indications of the market to go bad, to go down, then yes, then that's when the gold will rally. But when the market goes down, then the gold will actually fall as well, in my opinion, and I will explain why. Because whenever you enter these problems, like let's say if suddenly a government is lacking, let's say, cash to support the economy, you can always sell your reserves, at least a portion. And this way, basically, you can increase the amount of money. Then you can help out your own people instead of like printing it. So why not? And that's what I'm saying. That's where. But if you're going to start selling, then you're going to increase the supply. So if you're increasing the supply, the price drops. I mean, that's kind of understandable. So anyway, but this is, like I said, this is just an idea. You feel free to debate this. Feel free to kind of, argue with me on this one. I'm more than happy, because maybe there is something that I'm not seeing and there is something that you're seeing. So let me know in the comments. Look, jumping into, oh, by the way, in terms of where it could go. Now, look, I mean, for now, we're seeing a little bit of a retracement. That's fine. We cleared this the high of the 23rd of May. That's great. So now we established a new high for June, which is around the 3,392. Look, either way, I said to you before, and I'll say it again, I'm still aiming for the for this 3,430 zone. That's what I'm going to stick to. I'm not really going to improvise too much. And then if I reach this area, if I see this area getting reached, then I'll consider the next potential target. But at the moment, I'm not even excluding the possibility of a little bit of a larger correction back down here. But as long as we stay above the crossroads of these two lines, the upper side of the falling channel and this upside support line, then I will continue targeting the upside. If we see a drop below the crossroads, then yep, I would say I'm leaning towards the downside just a little bit. Silver, there we go. Look at the pop here. Boom. I mean, beautiful on Monday. There we go. We popped. We traveled higher. We cleared my highest point of March. There we go. And we created a new high for this year. But this 34.86 territory, which is marked by the highest point of 2024, is still providing strong resistance. So I think that the commodity here is kind of building up, well, trying to build something here, maybe like a bullish flag or something like that, and then we could see, like a push like this, unless we start clearing or we start dropping back below the 33.68 zone right there. WTI oil continues to push higher. Yesterday we had a great move here. We cleared the 50-day EMA together with this downside line. That's great. So we remain above it right now. But as I said to you before, I'm leaning towards the upside just a little bit in the short run. right here towards this downside line taken from the highest point of January of 2025. But then, like I said, overall, I'm still bearish. I'm still bearish unless we start clearing this territory right there, this 100-day EMA. If we clear this 100-day EMA and the downside line, I'll go for this 200-day EMA, and then we'll take it from there. But at the moment, the very short term outlook remains somewhat positive as long as we stay above the 50-day EMA and this downside line. The short term this little short downside line. If we start dropping back below it, I will consider a move back down here, a move lower, and then we'll take it from there. Natural gas, we came closer to the 3.84 zone right there. So again, as I said before, a break of that area is required. If we can get that break, wonderful. I'll go to the upside. If we struggle, look, for me, the downside scenario probably will come on a break of this upside line. Take it from the low of the 24th of April. Let's have a look quickly at some commodities. The coffee one, yeah, there we go, getting closer to my 200-day EMA and this upside line. This is what I'm aiming for. This is roughly around the 330 zone, so let's see if we can reach that. What's that? Cocoa, beautiful rebound from this upside line, from the EMAs. Hey, is that enough to push it back up? Could be the case, as I will continue considering that as long as we stay above that upside line. If we start breaking it, I'll consider a move lower. Jumping into sugar. Now, sugar is kind of an interesting one here. It's trading below that 17 zone, but really struggling to push away from that 17 area. So it's below it, but it's struggling to move further south. So I'm being a little bit on the cautious side here. AUDUSD, let's jump into the Forex world, ladies and gentlemen. Look, same scenario. I'm not going to even say too much anything. I mean, if you watched my videos recently, then you know that I talked about this. Look, I'm waiting for a clearance here of the 0.6515 zone. If I can get that move, great, I'll go to the upside. Pretty straightforward, to be honest. ADP, AUDJPY. Now, this one is one of my favorite ones. I mean, this is my risk on, risk off monitor, and so far we're doing quite good. We're still remain above this downside line, the broken downside line taken from the highest point of July of 2024. So hey, I'm cautiously bullish. Why only cautiously? Because we remain still below the 100 and the 200-day EMA. So these are going to be my targets for now, and then we'll go from there. If we clear the 93.85 zone right there, we also clear the 100-day EMA shown as the blue line, and this opens the door to the 200-day EMA. Also, very quickly, I wanted to pick up on NZDCAD. Now, look, it's an interesting one, and NZDCAD is showing some nice here coiling up moment. Some of you might say maybe it's actually forming something of a range. Yeah, you won't be wrong there, to be honest, as well. So you can stick to that, but either way, it seems like it looks like a bullish flag. And why I'm picking up on this pair? Well, as you know, today we have the interest rate decision from Canada. Where's that? Wednesday. Yeah. Where's that? Canada. There we go. BoC interest rate decision. Now, 2.74. Look, with BoC, at the moment, I think that the forecast. The forecast is for the rate to stay the same. But some analysts are thinking maybe they're actually going to go for a cut because unemployment is like very close to 7%. We saw the core inflation actually ticking up a little bit, unlike the headline inflation, which dropped below the BoC's inflation target of 2% and came out at plus 1.7%. That's the other one is supporting the pause a little bit, because again, you've reached it, you've reached your target, so why to overdo it? Because if you think that inflation will start picking up again, so look, in a way there is a reasoning that Maybe it's better to drop it as low as possible, because if inflation is going to pick up, then you can actually start hiking so that you would have some room. Could be an idea, of course. So, but at the moment, the market is expecting for a no cut. But again, keep your eyes on it, and I would say wait for the number to come out and then see the reaction, and then you can do something about it if you feel comfortable. But also don't forget to watch to listen into the press conference, which is going to come out 45 minutes after the interest rate decision. So yeah, that's why in terms of the reaction in the Canadian dollar, look, I think that given the fact that inflation has been on the lower side, the headline inflation has been on the lower side, and the fact that the bank is not really willing to, or to go for a cut right now, this could be seen as a beneficial thing for the Canadian dollar. However, the fact that, like I said, the fact that the market is slowly getting worried that, hey, if the they're worried that the bank could start hiking again. This would, of course, like I said, be beneficial for the Canadian dollar. But if it cuts again, we could see the weakness in the Canadian dollar. And actually also the fact that if there's no action, maybe the Canadian dollar could still strengthen against some of its major counterparts. And I have NZDCAD here, and NZD might not be the one, might not be the currency against which the Canadian dollar would get stronger, because NZD and AUD are seen as risk currencies, which kind of favor when the stock market is going to the upside. And at the moment the stock market is going to the upside, we have a risk on environment, and meaning that NZD actually could still strengthen despite maybe the strength of the Canadian dollar. So NZD and AUD could still strengthen and push to the upside. And in this case here, this formation of a possible bullish flag is kind of supporting this idea. Let's see if that's going to play out. USDJPY very quickly. Yes, of course, the copy of almost the copy of DXY, but well, the copy of DXY is USDCHF, but I'll jump into that in a bit. And for now, we're just waiting to see what's going to happen with the Japanese yen as well. I mean, at the moment, the stock market is pushing higher. No need for the Japanese yen yet. But if we start suddenly reversing back down, the Japanese yen could strengthen and could pick up buying interest, meaning USDJPY could drift again to the downside. USDCAD, just a quick update here. Yes, the same story is valid. 1.3686, that's what I'm watching. A nice good drop below it could attract a few more sellers into the game here. USDCHF, a bit of a roller coaster ride, to be honest. Let's remove all the drawings and start fresh. But yeah, the way everything is shaping up, I think that there could be some more downside to come, at least in the near term. Let's see, unless it starts pushing. Oh, excuse me. Unless it starts pushing above the high of last week. And the high of last week is somewhere around here, near the 0.8348, Yep. At the same time, if we can clear this area, we could clear the 50-day EMA and then target the 100-day EMA. So let's jump into EURUSD. This one is still positive despite the few moments here and there. I mean, it's a little bit of a roller coaster ride, to be honest, but the overall trend is still to the upside. So as long as we can push above the 1.1425, I'm going to get a little bit more excited with the upside. But if we start falling below the 1.1265 zone right there, then yes, I'm going to consider a move lower. EUROJPY is at 164 zone, and yep, if we can clear this area, I'm going to go to the upside here. I'm going to go higher. I'm going to aim for some of these areas. For me, the downside scenario is in a break of all my EMAs, and then yeah, I'll consider some moves to the downside. GBPUSD very quickly. Yes, so far so good, still on the positive side. However, I think that we would need to see a break of the current, or should I say, the highest point of May, near the 1.3593 zone. If we can get that, forthcoming higher high will be confirmed. Let's jump into the crypto world for dessert now, ladies and gentlemen. Bitcoin. So look, it's an interesting one, and we did do the 23.6 retracement on the Fibonacci, which is drawn from the lowest point of April to the highest point of May. We did the 23.6. We still remain above this little short-term upside line, so in a way everything is kind of pointing a little bit more towards the upside, to be honest. But again, I would prefer to see a push above the 106,800 zone in order, or let's face it, if we can push above the 107 territory, that would be great already. Then I will go for that 112 zone or even above that. But at the moment, somebody might say, hey, maybe we're forming something of something like a head and shoulders pattern. Look, it could be the case. I'm not arguing there. But for me, I would prefer to wait for a drop below that 23.6 here, which is around 103,000 zone. Bitcoin Cash looks somewhat positive, but again, a stronger rebound here is needed at the moment. It is just balancing above all the EMAs on my daily chart. If we start clearing those, I'll go lower. Now, unlike other cryptos, unlike the Bitcoin or anything else, this one I'm somehow a believer in this one. And just looking at the technical picture, look at this. We're struggling to go for a larger retracement. We keep on forming actually higher lows. So we're struggling with the higher highs, but we're forming higher lows, and that's where the beauty comes in here. And that's where we could see this one maybe popping higher. Maybe we're forming something like a bullish flag here. But if it's going to pop above the 2,737 territory, then great. I'll consider some higher moves. Or in general, I would prefer actually to wait for a move above the highest point of May near the 2,788 zone, and then we'll go higher. But the downside scenario, a drop below the 200-day EMA may attract a few more sellers here towards this, towards the remaining EMAs and this upside line taken from the low of the 9th of April. Ripple very quickly pushed back up after rebounding from the 200-day EMA, but struggling to push above the 50 and the 100 day EMA. If we can do that, I will consider a larger correction to the upside, because we're trading still below this downside line taken from the highest point of January of 2025. For the downside, we need to see a drop below the 200-day EMA in order to consider a move lower. LTCUSD, Litecoin, beautiful rebound from this 83.30 zone. Look, in general, it's still bearish, and that's what I'm saying. That's why Ethereum looks a little bit better than anything else, because all these are kind of looking quite bearish, to be honest. But again, confirmation breaks are needed, so yeah, we're waiting for those. Dogecoin, we're still below all the EMAs, so I'm leaning towards the downside here. Polkadot also below all the EMAs, below this upside line. So in a way, everything's kind of pointing a little bit more towards the downside. We can redraw this very quickly. The downside line is, yes, something around here. It's drawn from the highest point of May. And finally, Tron, so beautiful, still holding above this highlighted area. I talked about it. This was my breakout zone to the upside. We did that. Now it's acting as a good area of support. Now my breakout point to the upside is on a break above the 0.2822 here. So this is my territory for some higher areas. A nice good pop above it would confirm a forthcoming higher high. That's the highest point of May, by the way. Ladies and gentlemen, that is a wrap. That is a wrap. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everything. Ladies and gentlemen, thank you. And look, if you want to join me on Friday for the weekly wrap-up, we will have the NFPs, of course, as well. So we'll dig into all that. But for now, just like I said, just follow us everywhere. TradingView, YouTube, and there will be a little video coming out on the ECB interest rate decision tomorrow. So, hey, stay tuned, yeah, I'll see you later. See you later, ladies and gentlemen. Stay safe, have your stop losses in place, risk only which can afford to lose, don't overtrade, and everything will be fine. Bye-bye.